Good morning, everyone. Today is the 13th of February. This is Brad Matheny. This is the Plan Your Trade video, as you're probably well aware. Well, first off, I want to thank everybody for being patient over the last couple of days. My father is fine, thank you. He is a disabled vet. Was in the Air Force. The VA has taken great care of him. He went through a spinal cord reconstruction surgery many years ago, a little over 10 years ago, and the VA has been wonderful. For I know that others have different stories of the VA, but I can only tell you my experience, and I can tell you that the Spinal Recovery Center in Long Beach and the VA hospital out here in well, let's call it Loma Linda. It's actually San Bernardino, I think, but they call it Loma Linda, are fantastic. The doctors, the nurses, I mean, they are fantastic. The doctors did the surgery. The doctor does apparently something like 5 or 6 of these surgeries a week. He's very skilled, completely reconstructed my father's spine. My father was paralyzed at the time. He is now walking with a walker, so he's recovered. My father has gotten great care from the VA, absolutely wonderful care. And if they were closer, we'd probably go much, 4 times, 5 times a year for checkups and what have you. But anyway, it's a little bit of a drive. Long Beach is, if you understand California, Long Beach is pretty much right between downtown LA and let's call it Orange County. So it's 25 miles north of Orange County and probably 35 miles south of LA. But if you get stuck up in that traffic after 3 o'clock in California, you'll kiss your afternoon goodbye, especially on a rainy day like yesterday. So we did well. Everything was good. No problems. And Dad got a clean bill of health. Thank God. All good for the next year. So again, thank you for everyone's well wishes. And now let's get back to the market. So we're looking at a Harami Inside day after a little base rally day yesterday. We're in this explosive trending bullish with accumulation, looking at the crush pattern tomorrow, which could be a big breakdown. All I keep coming back to here, guys, and I'm going to go over this is a 1 hour chart. So all I keep coming back to here as I reposition is this rolling. So let me get rid of some of these. I'll leave that. Get rid of that. Get rid of that. Get rid of that. Get rid of that green line. Get rid of the island pattern. And now, all I'm going to show you is this. I keep seeing this rolling excess phase peak type pattern flagging back out. So I'll do that in bright blue. Oh, blue. Then I see another rolling excess phase peak pattern setting up. Do that in light blue. So when I look at this, I keep seeing these continued flagging type of highs coming across like this, and eventually a high over here. Now, these lows broke down lower. Okay, I get that. That's a lower low scenario, higher high or lower high scenario. But now we've been moving up into this very tight range here above this support level, which I'd been drawing earlier. So we're really kind of tightening. If I were to tell you what I think is happening in a market, we're looking for a big flag apex type pattern. Now, if I come over here to the energy chart and I go to the ES, and let's say we go to daily, get rid of my drawing. Well, let's just come in here and get rid of everything. Well, the NQ is actually clearer. So here we go. I've already drawn it. And there is the flag. So you can see that the entire rotation back over here, going back to the 23rd, 20th of January, the peak, the rolling, the flagging, the sideways consolidation, we are essentially moving into a very extended flag. And what you can see right here on the NQ going all the way back to August, we've got a very clean August 2024, very clean flag setting up. Now, what's interesting about this is, the whole idea of the count. So ideally, we would look here, A, B, C, D, and then we have this E potentially. Now you can argue that we have an E here, and then a failure, then a new count. So if we do this structurally, we're going A, B, C, D, up in here to E, where we should have potentially broken out. And now we have this failure going down to an A, B, C, D, E potential. So the failure of the E cycle, and this is where I'm confused. Okay, so this is where I tell you that we have essentially a dual flagging process that's setting up. We have a very strong potential, in my opinion, for a big breakdown. Ultimately, as I mentioned to you, I think we're going to be moving into, a higher price move. So understand that we're still moving through this channel and moving through, well, let's call it this channel, into that big, broad megaphone pattern I keep talking about. If you remember, I've talked about this for months, going back to, really November, December, moving into this megaphone pattern where I think that the markets are going to continue to roll through cycles into June, July, and then roll up into a rally phase back here. So we could be moving into this type of a cycle pattern, and we are just now ready to be breaking potentially to the downside off of this flag. My cycle patterns suggest that we're moving into this crush pattern, a top, gap potential, gap reversal, rotation, top resistance. Then we move into this rally phase here, one in a carryover mode, one in a counter trend mode, weekend gap, and then a gap up lower. But again, my patterns back over here continue to suggest that we're moving into that major bottom. This is a peak bottom on the 10th, which just means that we established kind of a high price peak and a major bottom type formation, which could be within the call it the 10th, 12th, 13th kind of area. And then we move into this period of really, strength around the 24th, and then move into disruption around March 13th, move into a breakaway with strength, and then move into another major bottom here on the 21st and another major bottom here on the 24th. So, we're looking at that right here. Well, probably over here. I drew it a little wrong, incorrectly. So the bottom is going to be down here, maybe about like that. And what we're looking at is kind of in this manner, a potential breakdown moving up into this base, moving down here into this March 21st, so 321 through 24 bottom right here, and moving into this potential, call it late Feb bottom right here, maybe on a breakaway. It could happen, like I mentioned to you. I'm looking at this data. I still believe that the data presents very clean breakdown. And I said, looking at this flag, it's very hard to see an A, B, C, D, E type of move moving into, again, a failed flag, a breakdown, moving A, B, C, D, and moving into a breakdown E. So, it really comes down to, I guess if I were to try to explain this to you, it comes down to a breakaway mode. So you can see we have very clean rejection right across this area. I would say that a rejection below this, call it 21,150 area, or a rally above, let's call it this area here, a rally above, call it 22,135, maybe a little higher, because remember we have this major high back over here. So 22,167. To me, that is really kind of a line in the sand. Okay. If we get a good strong rally with momentum up above, say 22,200, then yeah, I'm going to suggest that, we're looking at a potential breakaway, and I would think we would be seeing very strong upward trending. If we get a breakdown below this 21,150, and again, I'm doing all this on the NQ, but the same basic data applies to the SPY. 22,175, let's call it. So there's our range. And we're really flagging out. We're gonna get a lot of volatility out here. You've got a dual flag setting up in this channeling mode. And like I said, I expect the markets, just because of the disruption of the Trump administration and the uncertain policy, I expect the markets to pause. I really do. And when you think about this from a larger standpoint, this is a daily chart, auto scale. This is I don't want to call it a necessary pause, but in a way, it is a necessary pause. Come over here and take a look at this on a weekly, so you can see where I'm at with this. So if this is the low, which I've gone over, and we're going over these cycles, so this is wave 4 low, we move up into A, down into B, up into kind of an A, B, C mode here, moving down into maybe a pullback. So this would be 1, 2, 3, 4, 5, possibly, moving down into a initial pullback wave here, rallying back up out of it. So if you look at this from a standpoint of, A, B, C, D, potential E. Trump gets inaugurated. We have the election. It's a little disruptive. And we move into a little bit of a consolidation pattern right here after moving through our A, B, C, D, E type structure, where E pauses right around the disruption, which is the new Trump administration and what's going on. We go through a pausing structure, 2, 3, 4, 5 months of a pausing into some sort of a rally, or 2, 3, 4 months of some sort of a rolling structure before we rally back up out of it the second half of the year. That makes a lot of sense to me. It really does. A lot of volatility and a potential for a breakdown. Now, the alternate is that we could have a straight up just rally mode coming out of this. But to be honest with you, I think that's kind of few and far between. I think that's a low lying opportunity. It could happen. Not saying that it won't. I'm going to play what the market tells us. But again, look at this chart. And this is probably one of the cleaner charts I'm going to show you guys, given all the drawing I normally do. But look at this. This, to me, absolutely screams bottom, base. Okay. I mean, here's our bottom. Here's our cycle. Low, my count, wave 4, moving into an A, B, C, D, E. We might get a little bounce up here to 32 or 2321. Sorry, 23,120. But I look at this as the peak, the washout here, moving into this consolidation phase. And like I said, I think you can very clearly see this rolling sideways flag. And if we get down here into deeper look at this, you can see daily here. This is a daily chart that we're moving into this really solid sideways flagging. So we're very close to an apex, moving here around the 20th next week into this apex. We're going to start to see a lot of volatility. So be prepared that we're going to start to see a lot of volatility out here within these ranges. 20,000. Now let me come over here to SPY. I'll try to do the same basic. Yeah, okay. So don't want to waste forever doing this, but I want to just get you guys to see the same basic setup. Okay. Now we'll come here. We'll draw our flagging from here all the way across, roughly here. And we will draw our flag from here, roughly across to here. So here's our flag setup. Okay. And we get our downward channeling roughly across here. Now the SPY is going to be different, in my opinion, than the QQQ and the NASDAQ, simply because the SPY is a different beast, and the price range and rotation is going to stay more narrow. Here's our flag, same setup. Same setup right here. There's our flag. Let me move this a little higher so you can see it. So you can see our count up here, A, B, C, D, failure to break out here at E, and we rolled. So now we're rolling here into what's likely going to be an A, B, C, D, E potential. That could happen very quickly in this tightening range. So again, we're kind of at this move where predominantly on the SPY here, we have a little support to the upside. Whereas we do have this apexing breakdown. We kind of did fail here at E. We don't have that volatility yet. But again, my argument is that, given the uncertainty, given what we're doing, I still believe that given my rotational patterns, we're looking at this breakdown into March 21st, 22nd, rolling, breaking down, rolling, breaking down, and then finally breaking up. I kind of think that's a very solid expectation going forward, and I think traders need to be prepared for a very volatile rollover, really trying to come back and test on the SPY back this level, and potentially down here into this gapping level here. I think that's really where we're headed. I think we're headed down in that 550 area. Okay, so the pattern itself today is a Harami Inside day. Given that, should be fairly mellow, meaning not going to have a whole lot of rotation. A Harami pattern is basically an inside day. That means that this is daily. We should stay somewhere within this range today. So hypothetically in this range, purple. So somewhere in this, 602 to 599 range. If we get a breakdown, I mean, I'd love it. I'm positioned for the breakdown. Thought that we would see a deep V, which may have actually set up yesterday, but we could get a big breakdown still between now and next week. Anytime between now and next week. So we'll see how it plays out. Same thing here with the QQQ. We're looking at a possible big breakdown. Again, same setup. I'm seeing lots of little excess phase peak patterns rolling through this channel. You can see that I drew this. I'm going to have to redraw this. So let me explain it to you. The excess phase peak pattern here comes up, comes down, flags out here in purple. You can see it. We've got a bunch of them actually You got the green one here, you got the purple one setting up here. The next phase here, guys, is like I said, either we get above this level or we get above this level up here in green, and we would attempt to break out to the upside if we get a big rally. If we don't get above this level, we're not going to get a big rally breakout. What we would do is we would roll down into consolidation and then break lower. And that would be the most likely outcome right now. Okay. Is that if we can't get above this 532, 534 area, then we're going to break down and try to take out this low and or this low. So 510 on the QQQ and 500 on the QQQ. Same thing back here on the SPY. If we cannot get higher through the excess phase peak patterns, which are setting up here, I'll do them with the highlighter. Here's the excess phase peak pattern here. You can kind of draw it very cleanly. There's the major excess phase peak pattern. Then we have a secondary excess phase peak pattern coming like this, which is, again, just a slightly different. I think I picked that one. Yeah, 8. So there you go. There's the dual excess phase peak pattern setting up here. We've got the same kind of construct. We've got to get above this level. Sorry, that's supposed to be a horizontal line. Oh, can't draw this morning. Come on, mouse. Got to get above that 610, 611 area in order to really mount a rally. The longer we fail below that 610, 611, which is right here, call it 611. The longer we fail below that 611, that means that we are going to get and must then attempt to break this low and or this low, which again is 12 and kind of purplish, reddish. Oh, whatever. Don't know where the matching color is. There we go. So as long as we fail to get above this 611 area, the next big move here is to the downside. The next big move is to break down below this low, move into consolidation, and then break down into the ultimate low. So when you get right down to it, failure here would be failure to get to the upside. That would be our plan B, would be it breaks to the upside. Plan A would be that we break down, because that's what happens during these excess phase peak patterns. You plan for the A and then it invalidates back to the upside to B. So obviously moving higher would be the invalidate mode back into a long trade. So we're really looking for kind of a breakdown mode here. And again, the consolidation mode, if my theory is correct, we could move into this consolidation mode for a while. We could stay in this kind of sideways trending through this kind of a channel, meandering downward for months. So be aware that we could be in this channel for months, like Bitcoin has. Okay, now let's go take a look at gold and silver. Gold and silver are moving back higher a little bit. We came up to this 29, almost 3 grand, 29.68 on gold. Silver's moving a little bit higher as well. I've been kind of looking for that breakdown, for that panic mode in metals, given what I thought was going to be a breakdown in the markets. I'm going to 4-hour data here. And if we do get any type of a bigger breakdown in the markets, we're going to see a panic mode probably back down to 28.40, 28.25 on gold, maybe in silver back down to this 31 area. So understand that if we do get that panic selling, be prepared for silver and gold to fall maybe I would guess 4, 5, 6%. Yeah, there's about 6% right there. And gold would fall down into this 28.20 area. That's 4.5%, 5%. So this is the area that I think that gold could come to, which is a breakdown into this area, and silver a breakdown into this area, about 31. And there's our gold area. So the reality is that if we get the breakdown that I suspect, I think you're going to see gold come back down and retest the 28.20, 28.35 area. I think you're going to see silver come down and test the 31.25 area, and build some support, maybe a little lower actually for gold, maybe back down, or silver, into the 30.75, 30.60 area. But ultimately, the rally will continue. So understand, this is big, broad rally phase. It's just that this panic type of selling, if we get it, is going to potentially drive silver down and gold down at the same time. Okay, and then lastly, we'll come over here. Don't want to be too long. Bitcoin. Oops. And Bitcoin 1 hour is just, what happened to Bitcoin? We were on this terror rally. Remember back over here after the election? It was 106, 108. Everybody was talking about 120, 150,000. And it's just rolled into this migrational consolidation. Well, this is the same thing. Okay. And you can see it here. If I come out here to daily, you can see I've drawn the same setup. So why is it, Brad, you think the entire markets are going to move into this consolidated phase? Because they don't know how to interpret the ever shifting landscape of the Trump economy. I think it's going to start to solidify out in, July, August, September, October, maybe November, December, who knows? But I think for now, we're going to have so much new changing landscape that the markets are just going to consolidate. And what we're looking for here with Bitcoin is Bitcoin here breaking downward, breaking through a lot of these excess phase peak rotations here, over here. We keep getting down to this 92,300 level. I mean, it's crazy how much we keep dancing around this 92,300 level. And next, ladies and gentlemen, next we're going to be moving potentially back down through this phase. We kind of moved into a moderate consolidation phase here, through this bit of a rotation. And I think what we're doing, we've already broken down below this low with this low. So here's our consolidation. Next, we move down into this low here. I think we're looking at 83,800, maybe 82,400. And I think this is going to be the breakdown coinciding with the SPY, the QQQ, and the metals. I think this is going to be the breakdown that sets up possibly between now and early March, where it just collapses down into this area and then collapses potentially back into that March 22nd low. Remember that March 22nd, 23rd, 24th low. Oh boy, quit, Katie. Let me get through this. Back over here. Well, actually, I'm going to move it right over there. So we have the two lows. We have the February lows here, and we have the March lows here. And I think that those could be the big areas where the market actually breaks down into or through this channel through a big market correction. Downward, big ultimate downward cycle, which could essentially establish the lows. Right now I'm using these lows, but if we broke out into a new lower channel like this or this, we could have a very large megaphones base setting up, which could ultimately send Bitcoin all the way back down to this 56, 57,000 area. But we don't have that yet. So we're going off of price levels we do have, which is pretty much right there. Okay, that's it. Again, thank you for all the best wishes. Like I said, had a great day. Everything is safe. California is preparing to try to bail out from this, or Southern Cal. We haven't had any rain in months, real rain. So we're going to take what we get today. and just say prayers for the people up in the fire zones. Yeah, there's going to be a lot of dirt and mud, and who knows what else that blows through. That's really standard up in that Pasadena area. A lot of mud come down out of those mountains and heavy rains. So it's just kind of what happens out here. All right, guys, talk to you later. Bye.